एवरीवन, वेलकम टू आवर यूट्यूब चैनल। मैं हूँ चारू आपके साथ एंड एज प्रॉमिस्ड वी आर launching our first video on option trading strategies. So we are feeling deeply honored by your consistent support and your loyalty by viewing our videos. After a thorough research and going by the market movement past week from 25th of January 2021 to 29th of January 2021, we have the following conclusions to make. It's a very difficult trade setup generated by the operators, and all big markets affecting news are paid and timed to their advertisement. Just again, just against everybody's expectations, market crashed after kissing 50,000 points. It was expected that Nifty 50 would hit 15,000 points in the pre-budget rally, but the opposite happened. This is because of a lot of call options getting sold. Many retail investors lost money and burned their fingers. Such moves do shatter confidence of newcomers. I believe only experienced and fearless gut traders will survive such market movements. First, market crashing down. Then the 29th January movement, where as expected the trading had to be light. So it went flat and range bound till 2 p.m. and then suddenly a huge 700 point rise and then a 700 point fall came in a span of half an hour only. I believe this have to do with some speculative moves of the operators and option sellers. It can be interpreted as a plot to hit a stop loss of put option holders by reducing the prices of puts and then taking the put options up by bringing the entire market down after budget. These are the insights with which we begin dictating our carefully crafted option trading strategy on budget day to take advantage of post-budget reaction. So with that, a very warm welcome to our YouTube channel and welcome to the first video of option trading strategy. So मेरे दलाल स्ट्रीट के दोस्तों, if you have really liked all the videos posted by us, then please do praise the content creator Mr. Karan, and also who does all the midnight gold digging for you guys. He burns his midnight oil and creates all the wonderful and professional content. So do give him and the team a heartfelt thanks in the comment section. And also, if you have earned post budget in these options, then also kindly mention that in the comment section. And to understand this video, make sure to watch the complete video till the end, so that and do not leave in between to understand advanced technical analysis in option trading as strategized hereunder. Also, please do share the videos link to all the social medias and to all your friends and relatives, and also do subscribe the channel if you want to, if you are interested in becoming my Dalal Street mate, and it's a humble request to like all the videos. With this, let's begin with our option buying strategy, where we have identified 4 new fundamentally sound but highly volatile companies which are having a higher probability of steeper price movement swings after budget as market reacts and also overreacts to the budget. I will call this strategy a mountain making strategy used by volatile stocks prior and post the event. So going by the price chart, a huge steep volatility has been observed in a lot of stock at or near event dates or big market movements. Since these stock price gives out huge volatility, it generates opportunity for the option buyer to pre-plan and trade. One can consider buying an at-the-money call and put option or something nearby, far from the expiry date, and hold it till the event is over. The option buyer may be able to get exit opportunities with 60% to 200% profit in about a week's time. It is very normal to see such mind-blowing and unexpected price movements in the stock option prices in a span of just a few hours. When there are events which are big, all corporate news are also timed accordingly, and performance of the company is also decided as a pre-planned price movement. So here our entry and exit strategy is elaborated as under. One can buy an option on the date. The price movement is flat a couple of days ago, and option value depreciates when there is no volatility. Now, usually there are pre-event price fluctuations. These become opportunity to exit by booking profits. Here, the larger the price movement, the greater will be the profit. Here you can exit once option premiums are up 60 to 100% on one side. For example, if the stock price is down 2 to 3% for the day, the put option value will rise 50 to 100% at least. You have to exit the option at that time. On the other hand, call will decline 70 to 80%. Now, with your cash money, you can buy one more call option at cheaper prices and average out the calls held to take advantage of price reversal, and also buy one more deep out of the money put option to safeguard against unexpected price falls such as further bearish breakout movements. Remember that to play in options like playing with fire, and the capital of trader can even become zero on the same day, which makes playing in F&O quite risky. But on the other hand, there are chances that if the price goes as per your predicted pattern, you can make a dashing gain of doubling or even trebling the investment within a couple of days. This is not some casino, but a place where you predict via judgment and grit and research what the price reaction would be pre and post the event. So only those people who have the capacity to bear huge risks only please become option buyers. Here, only people who trade with discipline and balances, greed and emotion and fear can only earn money. But the money earned will be large, and I have seen people starting out with just rupees 10,000 capital a few years ago, and today owns a palatial mansion in a beachfront road in posh area valued at crores. So guys, buckle up your seatbelt. The fascinating journey to option trading starts now. I'm also deeply honored to present the gold digger content capable of generating massive returns for my risk-taking strong viewers in my very first own video on option trading. As promised, there are very well crafted option strategies to play during the budget day is given hereunder. We will be buying options as per a safely hedged low risk strategy to earn money safely and peacefully. So we will buy a jodi of call and put options. Investments required can be around rupees 50,000. Now once entered, exit with mind control and greed and fear balancing. The first stock which we recommend here is Apollo Hospital. Buy rupees 2,600 strike price, February month call option at rupees 95 to rupees 100, and buy rupees 2,500 strike price February month put call option at rupees 75 to rupees 80. Depending on price movements, if there is volatility in the stock, we can plan our exit strategy. I have specially picked up these stocks due to the following insights and informations. Apollo Hospital can be benefited due to government's impetus on healthcare and focus to give relief to the taxpayers. If some announcements comes related to Mediclaim exemption or medical price decline during COVID-19, or some relief or subsidy is announced for hospitals and healthcare sector, Apollo hospitals will benefit a lot, and there can be steep and deep price swings of rupees 100 to rupees 150 per day, which will impact option prices lucratively. So on account of expected volatility, I will recommend considering this stock for option trading prior to the budget. The next option which we recommend is Piramal Enterprises Limited. Buy rupees 1400 strike price February month call option at around rupees 50, and buy rupees 1200 strike price February month put option at around rupees 35 to 40. And we picked up the stock due to following insights and information. Piramal Enterprises Limited can be benefited due to government's impetus on housing finance and NBFC related reliefs. Also, to give reliefs to the taxpayers. If some announcement comes related to cheaper credit facility to buy houses during COVID-19, this company will benefit a lot, and there can be volatile price movement of rupees 70. There can be volatile price movements of rupees 70 to rupees 100 per day, which will impact option prices lucratively. So on account of expected volatility, I will recommend considering this stock also for option trading prior to the budget. Also, this stock has tendency to overreact to the market movement as it's a high beta stock. So do keep this stock on your radar for taking advantage of a steep price movement possible. Third stock option which we recommend is Larsen and Toubro. Buy rupees 1340 strike price February month call option at rupees 60, and buy rupees 1320 strike price February month put option at rupees 45. We picked up the stock due to the following insight and information. L&T, which builds a lot of metro rail and large infrastructure objects such as bullet train or industrial plants or highways, can be benefited due to government's impetus or infrastructure projects. The government had earlier indicated that there has to be infrastructure-led growth as it leads to a huge employment generation. This may be some regulatory or tax-related reliefs announced, the budget day by the Finance Minister Nirmala Sitharaman, who had herself said that this union budget on February 1 will be never like before. Also, the Finance Minister is a huge dashing tier when it comes to reforms and tax cuts and disinvestment proposals. She will have all tasks cut out to give relief to the taxpayers and generate growth and development. If some announcement comes related to cheaper credit facility to speed up infrastructure projects post this COVID-19, this company will benefit the most, and there can be volatile price movement of 4% to 7%, which will impact option prices lucratively. So on account of expected volatility, I will recommend considering this stock also for option trading prior to the budget. Also, this stock has a tendency to quickly react to the market movement as it's one of the most valuable infrastructure stock in India and is traded heavily. Therefore, a volatile trade setup can't be ruled out on this counter. So lastly, the stock which we recommend is Ultratech Cement stock option, and buy rupees 5400 strike price February month call option at rupees 205, and buy option rupees 5200 strike price February month put option at rupees 150 around. We picked up the stock due to the following insight and information. Ultratech is one of the largest cement manufacturer of India, which helps build a lot of large housing and infrastructure projects like highways. So similar to L&T, this stock can be benefited due to government's impetus on infrastructure projects. This company manufactures cement, which is a basic raw material for these infrastructure companies like L&T. Since the government had earlier indicated that there has to be infrastructure-led growth, so there are high chances of volatility in this counter. Also, higher price swings aren't new to this stock. So one can take risk of buying this stock option prior to the budget. We don't find index options worthy on budget day because a lot of retail traders plan there and get trapped. So plan your trades and market investment accordingly with the risk factor in mind, especially the capital guzzling weekly options which carries a huge risk. And that's it for today. And if you earn big bucks due to these recommended options, kindly share the good news in the YouTube comment section. We will be pleased with your efforts and motivated to research more and do more accurate gold digging for our esteemed and trusted viewers. Let's be mates on the Dalal Street and grow together in this journey of option trading. Please subscribe to the channel and share the video, and heavily to make sure and to ensure that maximum number of audience can view our videos and can benefit from the gold digging done by Mr. Karan and the team. So that's it for today. Hopefully you have a cracking budget session and God gives you big profits on the budget day, on the post-budget reaction, which may have speculative price swings. That's it for today. Thank you.